One chip name rallying today, Intel, on a report the Trump administration is considering taking a stake in the company. Matthew Bryson, Wedbush Securities research and hardware analyst, joins us now. Matt, just frame it out for us in terms of what this might mean for Intel if it were to happen. It would seem like it would be kind of a national champion, and it would assert the government's thought that it's in the public interest to make sure Intel can produce domestically.
Yeah, certainly. I mean, this spending or influx of cash would support Intel. One of the concerns about Intel has simply been that they overspent the last couple of years, that their balance sheet can't support their future development, and the government coming in would resolve that issue. The problem, however, is Intel right now faces a technology deficit versus Taiwan Semi. And it's unclear that even with a better balance sheet that they're able to fix that.
So they're not able to necessarily fix that piece of it. But does it change the equation at all in terms of the overall corporate priorities of Intel? I mean, what are they trying to do? There's been thoughts about spinning out parts of the business, and kind of where would it could lock Intel in terms of having to spend? I mean, I think the concern would be if this were to compel Intel to continue investments in non-economic projects.
No, I mean that's exactly it, Mike. So there have been stories about the board wants to divest the foundry piece or the fab piece. If the U.S. government's going to invest in Intel, are they able to do that? Because without Intel chips, then there's really not a foundry customer. So yeah, it certainly adds another layer of potential difficulty for Intel in terms of limiting its optionality, if you will.
I wonder what you make of it at the same time that we're getting other competitors having to pay a percentage of their export revenue. I mean, it's an interesting. I mean, the two dynamics, the support and capital for one, and taking revenue from another. I just wonder, do you think the government is inserting itself too aggressively?
So I think that's a potential problem. So clearly, TSM has a technology advantage. If you set up U.S. industry where it becomes hard to work with Taiwan Semi, so someone like NVIDIA can't take advantage of Taiwan Semi's better technology, then you create a potential opportunity for non-U.S. competitors to come in and beat NVIDIA on AI or AMD on AI. And so for me, it is a potential concern, depending not so much on whether the U.S. invests in Intel, but what's the next step for the U.S.
What do you think this means then for tariffs? The government is currently doing this Section 232 investigation into the national security implications of semiconductors. Does something like an Intel investment to shore up its own kind of cash position on the basis of national security, does that rule these kind of 232 tariff implications as not as important, not as likely? Or how do you kind of square all of these things together?
I'm really struggling to understand the Section 232 tariffs in the sense that it appears like the U.S. isn't tariffing certain companies based on their decision to invest in the U.S. So you look at someone like Apple. Well, if Apple's buying chips from Qualcomm that are being fabbed at TSM, but it's not being tariffed, then effectively TSM isn't being tariffed on those chips. And so it's unclear to me, with all these apparent exemptions, who ends up getting tariffed versus who benefits. It sounds like we'll get an answer in the next 2 weeks. Originally, it looked like Intel was going to be a huge beneficiary, or at least something of a beneficiary. Now, I just don't know.
Yeah, struggling to understand, as you say, as we all are. Matt, thanks a lot. Appreciate it.